back. When it comes to making positive headlines in real estate, Blackstone India has made the most in 2014. The world's largest real estate investor has been slowly and steadily acquiring a portfolio of rent-yielding office assets. And these acquisitions have been made over the past few years, notably a time considered the toughest for this space in the country. Now, when the big players have decided to return, Blackstone has already notched enough assets to become the country's second largest landlord. Inching close to DLF, I caught up with Akhil Gupta to find out his views on the Indian economy, stocks and property. Here's a slice of that conversation. Akhil Gupta, thank you very much for speaking with NDTV. So the first question is India a good place to be in as a long-term investor even after the run-up in the markets?
Thank you, Manisha. First of all, let me wish you a Happy New Year and also to the viewers. When you talk about investment, you have to also talk about risk, and they go hand in hand. I would say on a risk to reward ratio, India looks better than any time before in terms of its potential. I think clearly the next $5 trillion economy is India, and that gives us a $3 trillion consumption economy, domestic market, and almost $2 trillion of investment in the next decade or so. So clearly, in terms of potential, India is one of the best in the world. Now, investors had a very bumpy ride. We had a great run from 2003 to 2009, and then because of global financial crisis, which is understandable, but I think where the investors get cagey is where, because of domestic policies, that we had to suffer a lot, our domestic environment. My chairman, Steve Schwarzman, he summed it up very elegantly, and he was reviewing the portfolio with me, and he said, Akhil, the most prudent assumptions made about India have turned out to be wildly optimistic. Mm-hmm. So that's the issue with the investors. I think it's time to make those positive assumptions again, I would say. But you cannot forget, the past, that we made this assumption in the past several times. I'm very, very optimistic on two counts. I think the governance will be quite different this time, because what failed us in the last 5 years was really governance. Okay. And governance, to me, relates to the leadership, and I have greatest respect for Dr. Manmohan Singh. But if I compare to Mr. Modi, I think he has the charisma, he has content, he has the courage, right? And he's committed for fighting corruption. Now, these 4 C's plus the mandate, if you look at it, in addition to the fact he has experience as a chief minister, all the issues that the country will face, he's a track record. So I think that gives me great amount of confidence that I think we'll see a different level of governance than we have seen before.
All right.
In addition to the governance, I would say the second factor, which I'm very, very bullish about, and this is something which is not domestic environment, but the external environment. I think the most positive thing about the external environment is the oil prices. Now, we had low oil prices in 2009 also, but that was because of global recession, and they came right back up. This time, there's a structural change in the global oil price, and this is great thing for India. And this time, the oil prices dropped because of shale production in the United States, right? And to me, that shale production is continuing to go up. So I don't see oil prices going up in triple digits. They're not going to stay this low. We think it may come back up, but I don't see them going up, haywire. And the two things that really upset, if you look at in the past, has created sort of roadblocks for the Indian economy has been either global financial crisis, either finance industry or high oil prices, oil industry. There's two things that create global recession as well as problems with India.
And you're comfortable that oil prices are not going to drop below $60 per barrel? Because that would actually make even shale unviable, is it?
Yes, and I think that may be the strategy of some of the OPEC players to make shale unviable. Having said that, at least the reports I read is that there's a lot of improvement in process and technology in the shale, and today, shale can be produced at $50 a barrel, but not all shale can be produced at $50 a barrel. So there'll be some dance which will go on between, at what price shale can be produced, and obviously, if that's the strategy, we don't know fully what the strategy of OPEC this time is.
Fair enough.
If that's the strategy, then no matter what, what you'll find is that you'll find somewhere $70, $75 a barrel is what I see for the next 5, 10 years.
As a stable
As a stable
figure.
price. And that gives a great global environment for India, you know.
All right, so let's come back and look inwards. There's been a lot of big talk, but not translated much into hard actions with the new government. Corporate India is getting impatient. Is that a worry?
No, it's not, because I think it's the intent that matters to me. There's this government, when this government came in, we were in a complete, sort of a
Hopeless situation.
quote unquote policy paralysis. This is the word my fellow colleagues have used. And the sentiment was very, very poor. So I think the first thing that has changed is the sentiment, which is a good thing. It's a very important thing in a democratic country like ours. I'll give you, take for example the power sector, which is a very, very important sector. In fact, this can make a big difference, both positive and negative, to the country. The speed with which our coal minister came with this ordinance was remarkable, and the quality of that ordinance is absolutely amazing.
Whatever you've seen of the first 7 months of this new government, do you think the pace of economic reforms is good enough for us to attain that number of 6.5% GDP growth in FY 15-16? We are headed that way?
Yes. I think clearly that's still below our potential, right? So yes, I would be saying that I'd like to see 8 to 9%. I like to see reforms sooner than later, and hopefully, let's give the government another 6 months. And the time to come to that judgment about this government will be 6 months more, because they have, they're starting from a very, very handicapped situation, right? And the full cabinet has just come in. It's not, and our problems are pretty ticklish, In some ways they are straightforward, but they're trade-offs, and they are, in a democracy, you just cannot, implement things. You have to look at all the pros and cons. You have to see in any good policy decision, there is a cost you're paying, cost for the short term, benefit for the long term. So obviously the people who are being affected in the short term, right, they're going to create a lot of noise, right? And the opposition, the way unfortunately our parliament is functioning, they're going to take a big advantage of that. And we see how the parliament is being disrupted.
Let's come to somewhat micro issues which are bothering the industry, and one of them is, of course, interest rates. There's a huge clamor. I think in recallable history, we've not had such low inflation, WPI at 0. Do you think that now is the time? I know that the Governor Rajan has actually taken a very tough stance, and he's been appreciated globally for taking that tough stance on interest rates.
My personal view is quite different, but I have such great respect for Governor Rajan, and I don't want to second guess what he's doing. He knows what he's doing. I personally would have lowered interest rates by now by 100 basis points, because to me the risk of not growing in the economy, not getting growth fast enough, is much more than stoking inflation again, especially when the macro environment is so benign right now, with oil prices weak, China slowing down, right? Commodity prices falling, right? And and there's a government that is functioning, our fiscal deficits coming down. So I don't see the risk of inflation getting stoked, right? But I do see risk. Look at the projects that are stalled right now. If we don't, restart those projects, we cannot get this growth. So I view the risk-reward trade-off from my vantage point very differently than he does. I like to see all my companies, pay lower interest costs, because their balance sheet have been eaten away because of high interest costs.
Very stretched.
Especially infrastructure companies have been very, very stretched, and not because of not their fault. They unfortunately didn't have long-term debt, so they went for whatever debt was available, and suddenly the project costs have gone up 400 basis points. Not their fault at all.
Right.
So I would rather lower the interest rates right away, and maybe he will surprise us by giving us a New Year's gift.
If I look at the markets today, where do you think that monies are going to go? Because valuations, everybody, start of December has started saying that they're looking stretched. Mid caps have had phenomenal run up. You had every consumer story. Even infrastructure stocks have gone up ahead of the fundamentals changing. So where would you look to park the PE money?
So it depends. If you have a rear view mirror, right, and based on the LTM multiples look very, very stretched, right?
They do.
But if you have a forward view, right, and if you have a long-term view, and there are many investors that have bought long-term. I mean, for example, Rakesh Jhunjhunwala bought NCC when it was 35 rupees, right? It's equal to like 170 rupees now. And he was buying when everybody was selling, because, as you rightly said, that infrastructure stocks have gone up 5, 6 times. But by the way, they were also beaten down pretty badly, right? So it's unfortunately what happens in the stock market. There's always this, overshoot and undershoot, right?
Personally, with India's story and a long-term view, what are the most appealing plays or sectors to look out for?
Manisha, if you have to have a 7 to 9% growth that we anticipate, all sectors have to do well, including real estate, infrastructure, consumer, energy, you name it. Otherwise, we cannot grow at 7 to 9%.
All right, a huge part of the consumption story is based on a revival in the job market and salaries going up, whether it's real estate you mentioned, and of course, because we're doing this specifically for a real estate show, do you think that now, there's a domestic investment cycle, but then there's also this pull for foreign investment to come in, long-term investment to come in? It had pretty much been cold shelved. Are they now dusting the plans and saying, yes, India is the place to be for us?
I think this REIT initiative that has been taken will be a very important one. We have to iron a few tax issues out from there. But I think once that gets sorted out, I think you can get easily $10 billion a year investment there. Right?
Okay.
And real estate is tied to domestic economy, and whatever people feel about India, they will feel about real estate. Real estate is a very, very big opportunity. In fact, we have both corporate private equity and real estate private equity, and I've always believed right from the day we have started our operation that real estate private equity is a much bigger opportunity than the corporate private equity.
Really? Okay. Place, you've already said that India growth story probably looks the most mouth-watering or the best, and you're placing it across all emerging markets. Is that so at this moment?
Which emerging market will you compare? No one has the fundamentals India has. Look at our demographics, right? And I said, we are also one of the most underperforming countries if I compare with the countries that have done well. That creates a huge opportunity for us, right? Brazil is, as you can see, is adversely affected because of the commodities, right? China is slowing down. Which other country will you want to compare? Japanese have their own issues.
Some amount of excitement around Mexico.
Mexico, yeah, Mexico. Yeah, so India is not the only country in terms of who might do well, but the size of the economy, the size of the opportunity that exists is the biggest in India. There's no question about that.
Currency risks? That's another big deterrent. But do you see any currency risks? Because the dollar will get stronger now if the US figures are looking good.
Currency risk in this, if the currency depreciates as a decent, sort of a 2 to 3% inflation differential kind of stuff.
Right.
I think foreign investors can bake that into their expected return. My personal view on the rupee is really linked to how well we do in governance in a growth story. Because if we get our growth on track, there'll be so much investment coming to India that and the rupee depreciation risk is much lesser.
Right.
We'll continue to have differential inflation vis-a-vis dollar, right? But I think we have done a lot of studies. The short term, right, on a yearly basis, the rupee can move more on the flows rather than on the inflation differential. And the reason very simple. On a purchasing power parity basis, we are so low right now.
Yes.
Then even if inflation is, we are higher in inflation, we still are more competitive.
Yes.
So our currency doesn't have to depreciate because of inflation to remain competitive.
Okay.
That's the whole reason why people think because of inflation differential, your currency has to go down. But as I just suggested to you, that it doesn't have to go down because you're already competitive. Right, because of purchasing power parity.
Right.
So the key thing is the flows. If the flows keep coming, then I think we have less of a risk. And the second thing, again, because the biggest risk used to be our current account deficit, right? Where my view on the oil prices gives me much more comfort in terms of lesser currency risk than ever existed before.
Is this the market for value investors, or is it really now a market only for growth investors?
No, I think there are both options. There are options for growth investors as well as options for value investors, definitely.
There are?
Oh, absolutely.
Okay. Okay. And what kind of monies do you think are worth committing to India in an entire portfolio of, let's say, a large fund which is looking at India now seriously?
See, global investors, they have the luxury of allocating money to different countries, right? And that's where you'll find that because of the recent experience in the past, and because there's several good deals now available in Europe, for example, right? that they'll be cautious in terms of allocation to India. But I think the biggest risk used to be our current account deficit, right? Where the more the flows keep coming, then I think we have less of a risk than ever existed before.
Is this the market for value investors, or is it really now a market only for growth investors?
There will be caution in terms of allocation to India. so there'll be a little bit of a behind the curve in terms of when the big amount of allocation starts or extra allocation starts coming to India for long-term investors, strategic investors. Strategic investors may already start coming in because they're taking a longer-term view than I'm taking as a private equity investor. So I think for strategic investors, this is like, don't even think twice. Somehow, internal problems we all, in a democracy, we all sort it out. Although a little slowly, but they get sorted out once for all, And democracy have a good way of cleansing, The last election shows that, rightly or wrongly, cleansing took place in the minds of in the public, and so our worst thing can happen for 4 or 5 years, and then after that we are back on track. So I would say that you'll start to see, let's say, a budget comes in, very progressive budget. There's some reforms, and I'd say key reforms would be. If we see progress in land reforms, labor reforms, and we get comfortable on how the power sector is going to get handled, because that is linked to everything. That's linked to NPAs in the banks. That's, today, ironically, you hear of shortages of power, brownouts, and yet there are no bids for, if I'm a power producer today, I don't have any plan, I don't have a state who's bidding for my power. This is irony. Right? And if you look at again last year, very little increase in price have taken place. Although the cost of electricity have gone dramatically higher because of inflation and all that stuff, but the price of electricity is one of the slowest increase in the last 3-4 years. So I think these 3 reforms people have to see. I think the crucial is our
land, labor, and power.
Yes. So Mr. Piyush Goyal has a great role to play. He's working very hard. He's very intelligent, very bright, visionary. So I hope he gets a little luck and gets sorted out. Everything's not under his control either,
Right,
But,
right. But some things are playing out well. Oil,
yes.
in fact, has
no,
been
as I said,
a great boon.
see if this ordinance is any indicator of to how his ministry is going to perform, I'm very hopeful that he'll sort out all the problems.
All right. So you think that within the next 3 years, we do have the potential, with everything going right, to cross about 8% growth on the GDP?
I hope so.
All right.
I see, whether it's 7.5 or 8, as long as we are getting our basic structural problems solved. See, I will rather see structural solutions, right, to our problems and see a slow and steady growth than some big bang, stuff. So I won't be worried about if the growth, if our GDP is only 7% growth, but our labor laws are excellent, our land issues are resolved, and and the power issues are resolved, and so many other things that are initiative like GST is done. See, I'm not worried, because we have to take a long-term 10-15 year view, and once you put the right structure in place in a democracy, and with so much of entrepreneurship, everything will take care of itself. This government has to. You mentioned the word ease of business. The one indicator, in fact, I will judge Modi's government by only one factor. What is our rank on ease of doing business after 5 years?
On that note, let's conclude. Thank you very much, Akhil Gupta, for speaking with us.
Thank you very much for inviting me.
We'll return to take a look at the 100 Smart Cities vision of the Modi government. Will this dream ever become possible? It's a question we are asking.